Hey everybody, this is Jim at SP500chart.com. It's about 10 minutes after 4 on 9/9/2013. Let me read this to you, then we'll take a look at the chart. The website and the video are for educational purposes, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Starting out here on a 15-minute chart, which really shows us everything that I think we probably need to see at this juncture. And if you have any questions, please go look for the weekend video, the last one before this, because I go into a little bit more detail about maybe some things that I'll just touch on briefly today. First off, I want to say this is the fourth day in a row now that we have closed over this, what used to be resistance line. We are now easily, with today's close, actually almost with that initial move in the morning, early this morning, we are now officially technically significant above this line. What does that mean? Well, that means we are more than 1% above it, which if this line was at 1640 in the morning, we open at 1656 or so, or that may have been a gap right there, but you know what I'm saying. Once the market got over about 1657, we are a solid 1% above this line, meaning, yeah, this is now confirmed as a technically significant move above this trend line. We mentioned over the weekend that there's the possibility that we may run into some resistance at this line that I've changed from a light gray to a light pink. And I have not moved this line. This line is exactly where it was over the weekend. It starts back here on the 15th of August and has another touch on the 26th of August, and then we extend it out today, where almost as if someone was watching the video and saying, let's put the brakes on. That's what happened today. We put the brakes on at roughly 1671 and change. Now, I made this pink because if we back up from this level over the next few days, and I'm not saying we're for sure going to do that, but if we back up from this level and maybe trade back down into the 1650s and then come back up to it, we would be looking at an inverted head and shoulders pattern. Now, here's the interesting thing. It seems like the last 2 or 3 times we've been looking at potential inverted head and shoulders in this market, we've ended up with really a shoulder and a head. In other words, instead of getting that left shoulder, deeper head, then shallower right shoulder, we've gone shoulder, head, breakout. So, if this holds true to that pattern, we may not see that much of a right shoulder. So I'm sticking with my long position in SPY, taken out in the very low 1630s. If we get up to the 1690s and it starts to look like we're seeing some significant weakness, I would likely sell that position there and then wait for a return back to this line, just out of general principle. But of course, we're not over this line yet. So what it's looking like right now, guys, it's looking like the S&P is preparing to move higher. And I know it seems incredulous. I know it seems, how could it possibly move higher? Because no one expects the market to move higher. Everyone expects Syria to be a problem. Everyone is looking at unemployment and going, Lord have mercy. The only reason we're at 7.3% is because a huge percentage of people who used to have 40-hour-a-week jobs now hold 29.5-hour-a-week jobs because of Obamacare. We're seeing all these negative things, but I'll remind you, the psychology of a top is not that it gets put in the midst of negativity. The psychology of a top is it gets put in when nothing can stop it, when nothing can stop the market from rising, when everybody says now is the time to go all in. And I don't think people are saying that. I think people are looking at the markets right now and they're skeptical. And I can't say that I blame them. But the chart is the chart. So let's see if we get an inverted head and shoulders right here. And if we do, let's see what kind of right shoulder, if anything much, we end up with. And I'll remind you, if you look at the Nasdaq, tell you what, let's do this. Let's look at the Nasdaq right here, 3702. What is that? Well, let's look at a 3-day chart, going all the way back to where the wheels were coming off this market in March. That is a high for the last 5 years. Well, let's back out a little bit more. Let's look at a weekly chart. Well, we got to back out a little bit more. Let's look at a 9-day chart. What do we have? How far do we have to go back before we see a level in the Nasdaq that is higher than 3702? We've got to go back to the year 2000. So, guys, that is a pretty strong stuff right there, and it looks to me as if the Nasdaq is what's going to stop it. Let's put it that way. Where are the brakes going to get put on? Because we are over some significant resistance levels where we would expect to see some difficulty. To be honest with you, the next thing that I could see happening in the Nasdaq where I would expect resistance would be one of two things. It would either be possibly one of these two peaks back in 2000, or this line right here, which again, I mean, and to be honest with you, that's kind of a stretch. The only other thing we could do is we could maybe draw a line over the 2010 and 2011 highs. And if we do that, what do we end up with? Well, here's our 2010, 2011. We end up with something where there's still room to run easily over 4,000. So, you know, what can I say there? If we look at that same line on our S&P chart, and you can really tell which one I chart. If we look at the same line right here, we have a line that in order for us to reach it anytime soon, we would be getting over 1,800. Now, am I saying that's going to happen? No, not yet. I need to be convinced of that. But if all I'm saying is, if we look at this same line in the S&P that we just examined in the Nasdaq, there's room to run. And again, the psychology that would say this market cannot possibly go up much higher, it's not. The psychology is simply not in place for a market top. I just don't see it. So what are we looking at? Well, as we come into tomorrow's trading, it would not surprise me one bit if we backed off of this 1671 level. And if the pattern holds true, we're not going to back off tremendously from that. And again, with the caveat that nothing extremely tumultuous takes place in the Middle East. By the way, I don't think we're going to go to war. I don't think Barack Obama has the political capital, nor does he have the strength of conviction over the issues involved to do that. I just don't think it's going to happen. I think when he says we have a red line, here it is, don't cross it or we're going to do bad things, and then he says, well, it really wasn't a red line, I think that tells us all we really need to know about what he wants to do, and that is he wants to avoid it. And I don't think there's anything good that will come out of it for his political standing. And I have a tendency to believe that political standing is very important to this president. So I don't think we're going to see any great self-sacrifice of political ground for some overriding and extremely urgent sense of principle. I don't get that kind of read. So anyway, what are we looking at? We're looking at, again, this little resistance here at 1671. If we get over that, then I would expect some gap resistance at about 1684. And if we overcome that, our next resistance level would be up just under 1700. But if we end up with an inverted head and shoulders pattern, we should overcome all of these, and we should be looking at a move up into the low 1720s. But I remind you, we're not there yet. So let's just keep an eye on it, see if during the rest of this week, if we get some kind of dip over here on the right side of this chart that would give us an inverted head and shoulders pattern that we then could trade on with a little bit more a sense of direction than what we've been forced to deal with over the past, probably over the past 3 weeks. So guys, there's your video for September 9th, 2013. I want to thank you for taking time out of your day to watch it, and I especially want to thank those of you who subscribe to SP500chart.com to thank you for your kind support. Take care.